Hello everyone, my friends. This is Mozart speaking. In this video, I'd like to take a more fundamental look at the current situation in crypto. Today we've got what you might call a red Monday, and while Bitcoin is just having a bit of a correction overall, nothing too special here. It's down about 3% on the daily chart. Altcoins have taken a much bigger hit. I'd say this is probably the first proper red candle we've seen since around the 6th of November in terms of its body volume. Not by the strength of the correction, but by the volume of its body. At the peak of the total 3 correction, AltaCap minus Bitcoin and Ether fell 6.5%. Now it has rebounded slightly to minus 5.5%. Now it has rebounded slightly to minus 5.5%. So what is the situation here? That is, well, yes, it is clear that the alt is being corrected today and is being corrected more strongly than usual, although it would seem that after such a series of growth, what could be terrible about this? But nevertheless, let's analyze this picture. Let's see how terrible everything is and where all this can go, that is, for Bitcoin. In general, in terms of trading, here is the limit that we have. It remains in place. I also gave the limit to ransom on Ether. We also have Solana actively. Our medium-term positions are also quite adequate and are going very well. That is, from the recent ones, literally on December 7th, the day before yesterday, a deal was completely closed on a medium-term one, plus 250%. Pay attention to the 1.5x shoulder. And I give all these deals exclusively in my Telegram channel. If you don't want to miss them, subscribe to my Telegram. The link is in the description, right below this video. Next we will go over more serious instruments. I will show some medium-term metrics and at the end we will draw conclusions. It won't be as fast as doing technical analysis on a chart, but these are more fundamental metrics. They are much more interesting than just pure candles and you can plan something based on them and not just make decisions in the moment. So, just bear with me a bit. This information is really going to help you out. The supply state, the so-called profitability state, is the percentage of Bitcoins from the total supply that are currently in profit. The red line shows the average over 4 years plus 1 standard deviation. Why 4 years? Because, as a rule, one cycle lasts about 4 years. The yellow line represents the average value without standard deviations. The green line at the bottom represents 4 years minus 1 standard deviation. So, when? Accordingly, the blue and blue lines are the current number of offers in profit, as a percentage. As soon as the blue line crosses the red line from below, that's when we enter what's known as the Euphoria phase according to this metric. So, at the moment, the average over 4 years plus 1 standard deviation is sitting at about 91% of the supply in profit. And as of yesterday, we're sitting at about 98.6% of the supply in profit. When Bitcoin dropped to 92,000, it corrected with a solid candlestick. Now, above the red line, the market is euphoric. A correction could be gradual, but the probability is higher. Above the red line, the market is euphoric. A correction doesn't have to be sharp. It could be gradual, but the probability is higher. We can see how long the price lingers in the euphoria zone. A correction here doesn't have to be sharp or quick. It could be gradual. Since the 15th of October, it's been nearly 2 months. The price stayed in that zone for about 3 months. You can see how long the price typically stays in the euphoria zone. Generally, it hangs around there for a while. So we can look at how long it managed to stay in that zone before. So, if we've been here since around the 15th of October, in a week it'll be 2 months. On average, in strong bull markets, which I think no one can deny we're in right now, let's take 2021 as an example. Back then, the price stayed in that zone for about 3 months before the first significant correction, which was over 20%. Next, we were in fits and starts here for about another 2 to 2.5 months, but with deeper corrections, and those deeper corrections happened more frequently. The same can be said about the cycle before the last one. 2017, 2016, 2017. That is, we were here for about 2 months, and we were here for 3 months before the 4. So, overall, this current movement has been going for 2 months, and it seems like there's still some room for at least one more impulse. But the thing is, we're gradually getting closer to some serious correction. Sooner or later, it's going to happen, and I reckon it'll be sooner rather than later, considering that we've been in this zone for almost 2 months now. That doesn't mean we're going to plummet down from where we are right now. It just means that with each passing day, the likelihood of that happening increases. You can also see this in the histogram at the bottom. Those red zones highlight the area of extreme profit. Extreme profit. You can see from the duration how long they lasted here and how long they're lasting now. You can compare all of this as well. So, we're starting to approach some, well, critical levels in terms of how long we've been in the profit zone. Next, a similar signal, but in a slightly different context. This is pure unrealized profit across the whole system. The same thing. The meaning is the same. The red line is the average over 4 years plus one standard deviation. Yellow. This is yellow. Just the average, the green line minus one standard deviation, all taken over 4 years. So, right now, our unrealized profit at its peak across the whole market was 0.63, which is 63% from its entry point across the entire market. This includes all short-term and long-term holders, everyone from a single cycle, just all lumped together, without any divisions. And now we're also above that zone. We actually entered it on the 11th of November, and now, well, we've been in it for about a month, as of today, the 9th of December. Moving on, a similar situation occurred in March of this year. From around the 28th or 27th of February to the 17th of March, we were there for even less than a month. But back in 2021, for example, we were above that zone for a much longer time. Next, it was pretty much the same in March of this year, from around the 28th or 27th of February to the 17th of March, we were there for even less than a month. But back in 2021, for example, we were above that zone for a much longer time. The market was in a state of euphoria for nearly 3.5 months according to this indicator. So, it was very, very long. Plus, the deviation of the unrealized profit zone from the red line was much higher than the current value. So, if at the peak in 2021 it was 74% compared to 61% for the reds, that means the deviation was nearly 20% higher. And we can also take a look at the cycle before the last one. The peak values were somewhere around 79 versus 57, that is, there was a 30% deviation. Now we have not gone into such a high deviation, that is, the maximum was 63% against 60%, that is, we are going almost 1-to-1. And in terms of time, we haven't been here for that long. So yes, even though the unrealized profit indicator across the board has gone quite high, I mean into the euphoria zone, above the red line. Relative values of deviations from this red line. And in terms of absolute values, there's been no extremes in how long we've been above the red line. And overall, the price can stay here longer, generally speaking. But the very fact that we're above it can't be ignored. And overall, the price can stay here longer, overall. But the very fact that we're above it can't be overlooked. We're still in the zone of euphoric profit, nonetheless. For the market, considering the 4-year cycle, anything above the red line is the zone of euphoric profit. The next indicator is, and a slightly different profile, it's the realized profit to loss indicator, smoothed over 2 weeks. So, the peak was at 45 over 14 days, meaning that on average, over those 14 days, for every $45 in profit, there was only $1 in loss. These are roughly the peaks from March. Back then it was 43, now it's 45. But if March was just a warm-up, now we're entering a true bull market, as I suspect, then, in 2021, those values reached to lower levels. By the way, 29 to 30 in 2021, and in the previous cycle, the peak was around 35, which is closer to the current values already. In principle, the current value, yes, we can say that they are probably the maximum. So, March and November of this year, in terms of peak sizes, they're not the highest in history, I reckon. But they are for the last 3 cycles because I think they were higher at the beginning. Yeah, there could have been profits of $186 at the very start of Bitcoin trading, with a $1 loss. What's important here is that this indicator works a bit differently. We're assessing the divergence here, meaning the reversal. into a global, strong correction or even a shift into a bear market usually happens when we start to see indicator divergence with the price. So, for example, even in March, that divergence was quite pronounced overall. More or less pronounced. Not as pronounced as in 2021, I'll show you that now, but it was there too. So, the indicator with the blue line is drawing a new peak below the previous one. The price is roughly at the same levels. There was a more pronounced divergence in March than there is now. Right now, there's none at all. We've drawn one peak and now we're coming down. So, there's a cooling off. Cooling off in terms of profit. Next. So, 2021 was more pronounced. It'll be clearer here what I want to say. So that's 1, 2, 3, 4. And the price goes 1, 2, 3, 4. Here you can see the quadruple divergences. 1, 2. You can see the same thing in 2017. It wasn't as pronounced here, but it was still more pronounced than it is now. 1, 2. A new peak below the previous one, while the price makes a new peak above the previous one. The final distribution, and we're turning into a bear market. There isn't any of that now. Right now, the market has made a huge profit. There's no doubt about it. That's a fact. This is also above, by the way, the red line, which is considered a very high risk, so it's the zone of euphoria. But still, it's just one bump without divergences. We're currently in a cooling phase. Basically, we can drop down to the red line, have a correction, which would actually be quite good and normal. Even while standing in this sideways market, even without any significant corrections, it's just that profits aren't materializing. It doesn't matter here whether you're making a loss or not. Losses just speed up the decline. But you can correct based on this indicator without actually making losses. The amount of profit you make will decrease with each passing day if there isn't any. It's the same here. Down below, you can see the histograms that show how long the indicator has been above the euphoric red line. In terms of timing, we've entered the profit zone, and we've been here for this long. In 2021, profit zone, we've been here for this long. In 2016 to 2017, profit zone, how long we were here, yes, there were more pronounced corrections, there was less liquidity in the system, but they were also much shorter than these 8 months since March this year. These are the 3 indicators that I showed. Overall, what are they saying? They're saying that yes, indeed, the price is above certain red lines, where the likelihood of a correction is very high. And, as a rule, after a certain amount of time spent above these lines, a significant correction would follow. Bitcoin was 15 to 25%, and in 2017, 30 to 40%. That's unlikely to happen right now. Now, we will probably see 15 to 20% in the end. Korean dump touch, solid candle, indicators unloading, timing and push extent not fully. But in terms of timing, in terms of the magnitude of the throw above this red line, not all indicators are yet showing peaks and extremes, and given the strength of the euphoria, in principle it is comparable to the strength of the euphoria of 2021. This is what's important to know about the anticipated correction. Leeway remains, and for now, I lean towards that. I'll show you some indicators that suggest even now there's been a slight cooling of extreme profits. I will now show you indicators that indicate that even at current levels, a slight cooling of these extreme profit values has already begun. This is the second part of the analysis. Let's go. Let's move on to realized profit, but specifically taking organizations into account. Yes, there's a massive profit locked in here. Here, MTGOK is also mixed in with its transfers. It does have an impact, of course, but long-term holders are definitely locking in their profits. You can see it in other indicators. Here, it's not so important how much profit has been locked in, considering that Bitcoin is sitting just under $100,000. It's clear that it will be higher than in March regarding 70. Here, the nature of this locking in is what really matters. That is, the meaning will be approximately the same as in the profit-loss ratio. We're identifying divergences where the price makes a new peak, but the indicator shows a lower peak than before, indicating market exhaustion and a potential crash. This pattern was evident in March 2021, with 3 consecutive lower peaks on the indicator while the price made higher peaks. Each new impulse locked in less profit, signaling an impending crash. Just like it was in March, where we saw 3 peaks in a row that were lower than the previous ones, while the price was making 3 peaks in a row that were higher than the previous ones. The year 2021. Even more pronounced. The same thing. The indicator is falling on the peaks, while the price is rising on the peaks. Even back in 2017, there were no exceptions here. 1, 2, 1, 2. The triple divergence before the 2017 crash. Right now, we are moving steadily. Each new peak is higher than the previous one. And as soon as we see some kind of divergence here, we can already think about some kind of global profit-taking and leaving the markets before a significant correction. Until this happens, any corrections are not a reason for panic, but a reason for buying off. Next, I'm taking futures from all exchanges, averaging them out, and smoothing over the last 7 days to get a more global view and to filter out the local noise. There are some jumps, particularly from the Korean exchanges and so on. So, what are we seeing right now? Currently, funding averages over the last 7 days peaking at 0.021% and ranging from 0.017 to 0.019. On exchanges like Bybit, it sometimes drops to 0.01%, far from March's peak, 2.5 times higher with 7-day smoothing. In 2021, values peaked at nearly 0.15%, averaging 0.12%. That's a long way off from the peak values in March, which were 2.5 times higher with the 7-day smoothing, just to remind you. And it's even further away from the values in 2021, which peaked at nearly 0.15%, but averaged around 0.12% with the 7-day smoothing. And the same rule applies here. The indicator draws peaks lower than the previous one, the price is higher than the previous one. So, the share of the speculative component here isn't particularly high. At the moment. I've shown you this in previous videos, and I'm now confirming it with the funding. And I'm looking at this with a 7-day smoothing. If I switch to the hourly charts, the funding has returned to around 0.01% on many exchanges. The market is still not longed at the current levels. And if we go down from the current levels, there's not much further to fall. There's not a huge amount of speculative interest here. There's some sort of conditional support that's likely to hold this drop. Let's move on. Where could we find a stop if we go lower? This area, known as cost-based distribution, or CBD, is a cluster zone that shows. The Debadishka is a cluster zone that shows the accumulation scale at each price level. So, over here on the right, we can see a scale where the cooler colors represent a low level of accumulation in trading, while the warmer colors indicate a high level of trading. So, starting from 0 up to about 500,000 bitcoins at one price level in coins, that's what's expressed here. We see that this Trump impulse occurred practically in a vacuum. Nothing really got traded here. And everything that started trading is roughly around these levels. At these levels, that's about $87,000 to $89,000. So here we can see an increase in trading density, with some more or less warm colors. Here we can see them. There's a clear support level at $92,000, but the biggest trading is happening right now in the current sideways movement. So, in this very range, there are a lot of levels where over 150 and even 200,000 bitcoins have been traded. So, if we drop below the conditional zone of $95,000, then the upper density will become resistance. We'll be testing $92,000, the nearest trading level. If we go below 92, we'll be heading towards the $87,000 zone. We're going to test $92,000, the nearest trading level. If we drop below 92, we'll be heading towards the $87,000 zone. And here, it will almost definitely stop. Well, I can't give you a 100% guarantee, of course, but there's a very high probability. The drop will be stopped, because you can't go into this vacuum. Once you get into it, it'll be closed off very quickly. And what needs to happen for that is that the Third World War has to start. You can assess the chances of that yourself. So, generally, there are two main key support levels. From below, it's 92,000. And then 87 to $90,000. So, these are the two main levels. Even at the current levels, there are quite a few yellow zones. The same $95,000, the same $97,000 were traded quite well. And it's quite likely that we could also stay in the current sideways movement. But the most important thing is this. Everything that's going to happen now regarding the unloading of the indicators I showed you in this video will most likely be happening in this sideways movement. Even if we just dive down from the current levels. I don't know, but something terrible is going to come out about inflation on Wednesday. Right there, I don't know, 0.3% higher than forecasts. That's it, the Fed won't be cutting rates in December. Right, we're off to 87. Buy at 87. That's a great price. Great. There's a massive support down there. They'll just be buying up everything they can. Next. This is an indicator. What you might call the supply quantity zone within a 15% range. Give or take from the current price, which is a crucial metric for understanding market dynamics and predicting future trends. So, what's the point? As soon as that blue line starts to go up, it means the market has been in a state of uncertainty for too long and a breakout is coming. It doesn't matter who, longs or shorts, the main thing is that this density, which is within a 15% range from the price, give or take, needs to be cleared out. It was like that before the Trump election. So, in the range of plus or minus 15%, there was a concentration of 0.316, which means 31.6% of the total supply, and all those short sellers were successfully taken out. This value has dropped to nearly 4% in the plus or minus 15% range. Right now, there's consolidation happening again, accumulation, distribution, and that's about 11.5%. Next. On top of that, over the weekend, another $2 billion was printed. Tesla printed it. Right now, their net position in USDT, well, across all stablecoins really, but it's mostly USDT, is over $20 billion. The inflow volume into crypto has slowed down a bit, just a little, but it's not critical for now. So, roughly from $131 billion to $129 billion. And on top of that, the volume of these coins on exchanges has also dipped a bit, but it still represents very large figures. So, from a peak of $15.8 to $16 billion, there's now about 14.3 left. Yeah, there's a slight dip, but nothing too serious. There are still a lot of stablecoins on the exchange, and they are there for a reason. They're waiting for some sort of significant correction to jump into the market at better prices. Yes, not all stables want to enter at highs, at every new green candle. That's something day traders love to do, but the smart big money tends to do it during corrections. So, based on these indicators, those last indicators in the second part of our review indicate that we're seeing some signs of cooling off in terms of funding and stable realized profit. Looking at the clusters overall, there is the nearest support at some reasonable price levels. Also, there was a significant sell-off near 90K, and now we're seeing some consolidation. Looking at the clusters, we can see the nearest support is closer. Plus, there was a sell-off, and now we're seeing some consolidation. Plus, there was quite a significant sell-off around the $90,000 mark, and now we're seeing some consolidation. The trading volume usually reaches 15 to 20% of the total supply before a new wave of unloading occurs. So, for a while, we might be moving in this range before we finally break through that $100,000 mark upwards. If we take another look purely at the chart, it's quite likely that in this zone, right here, we could be hovering. We might trade this Korean candle for a bit. If we look again at the graph, it is quite possible that in this zone, right here, we can walk. We might trade this Korean candle for a bit. So, we could come down to my limit order, maybe dip a bit lower, around 94 to 93. And then come back up here. We could come up. We've already partially traded up here, and we might return to around 103 to 104 right here. So, we could hang around here for a bit in December. maybe until the 20th of December, something like that. And then break through that 100. Drop lower. Drop lower. Well, maybe. So, the maximum support is right here. If the price ends up somewhere around here, that's where you need to buy in. And you should be buying in with quite a lot, because that gap I showed you is Trump's support. Some obstacles will be put in place if the price drops down there, but for now, there aren't any signs that the price will fall here. We're managing to stay within a more reasonable range. But for now, there aren't any serious reasons for the price to drop here. For now, we're managing to stay within a more sensible range. Well, probably with this. So, around $92,000 to $99,000. Here, basically, you can trade and unload the indicators. Thank you all for your attention. This was Mozart on the line. The review was long. If you liked this long review, give it a like so I know I'm not doing this for nothing. And basically, as the current situation develops, I'll be updating my forecasts. Wishing you all a lovely evening and see you soon. Bye for now.